So let me share with you guys how easy it is when you're trading on the larger time frame, such as the daily time frame. When you're taking your signals from the daily time frame, it literally takes all of the guesswork out of trading. Of course, you're never going to win every single trade, but trading on the larger time frames gives you such an advantage where you can actually see where the market is going. And if you know where the market is going, even if you don't have the best entries, as long as you're not over leveraging your account, you can always survive the market. So I'm going to show you guys exactly how I trade. Of course, there's different nuances to the way that I trade that I can't show in this video because essentially there's not enough time. But I'm going to show you guys the basics of how I trade. What I discovered, oh man, 5, 6, 7 years ago, that was the most easiest, the most easiest way to trade, but not necessarily the most easiest way to trade, but the most consistent way to trade, okay? Especially when someone like myself that has other obligations on a day-to-day basis other than just trading, okay? I like to have resources or revenue streams from different areas in my life, okay? Not only trading, because you have to think, if you're a full-time trader and you're only trading the markets, what happens when the markets aren't moving? Sometimes these markets can go through long periods of consolidation, right? So if the market isn't moving, essentially you're unable to make the money that you're accustomed to making. And I know a lot of people will say, well, that's when you want to diversify. You want to trade other assets. But I don't want to be a jack of a lot of trades. I want to actually be a master of something, right? I've always had that mindset. So yeah, there are other assets to trade, and markets have a lot of similarities, especially when you're trading from a technical standpoint. But I've always been of the belief that I want to master a certain market, right? So I'm going to show you guys how I trade, and if it's something that you think would work for you, if you want to learn the nuances of how I trade. Very successful trader. I've been profitable now over the past 3, 4, 5 years as a profitable trader, and this is the way that I am profitable when it comes to foreign exchange or forex trading. So let's just take a quick look. We're going to take a look at this is AUD Swiss franc, but let's look at another chart. Let's look at pick one. Let's do GBP JPY. Okay, and it doesn't matter the currency pair. I'm going to trade it all the same way. Right? I'm going to trade it all the same way because what I'm doing on the charts actually makes sense. Okay, so if you've been with me for a while, if you know how I trade, then you know I trade the larger time frames. Now I do day trade every now and then when I have time, but for the most part I'm trading the larger time frames, and I'm trading off significant levels of support and resistance, right? I have a support and resistance indicator on my chart. This is from Point Zero Trading. I've been rocking with this indicator now for years, and it's a really good indicator. It sets up the support and resistance levels, on its own. I usually go in and I used to set my own support and resistance levels, but I trade so many currency pairs, it just becomes a bother. I just lay this indicator on there now. There's a certain way I put this indicator on here. From trial and error, I figured out a way to add this indicator which works for me, okay? And I'm gonna show you guys how I do it. But let's get into the way I trade. So I'm only looking to trade, first off, in the direction of the overall trend. So we can see this trend is up. So I'm only looking to get into buy positions in this pair, right? Not only that, I'm only looking to trade off support or resistance levels. So in this, I'm only looking to trade off levels of support, right? Levels of support. I'm only interested in taking buys and trading off levels of support, right? So here would be the first trade that would catch my attention in this pair. Would have been this trade here, right? And why? because this market is going up, right? I know it looks like it's going down, but if we pan out to a larger time frame, we'll see that this market was actually going up. You know, that's why the larger time frames are important, because they show you what the market is actually doing, the direction of the big trend, not these small pullbacks, because these can look like trends on lower time frames, but they're really not the trend of the market. So this market is actually going up. This is the weekly time frame. So let's pan back down to the daily. Let's pan back down. I'm from Florida, guys, so my accent may sound a little funny. I may not fully pronounce all of my words. You know, instead of saying back, I say bike. You know, so just bear with me. But you get the drift. You get the drift in what I'm saying. But okay, so this will be the first trade I would take, right? In this pair. So why would I take this trade? So I'm noticing price coming down to this level right here of support. I'm seeing it wick out. It's wicking out right here. Right, these wicks are showing resistance. Like price comes to this level, it pushes it off, it pushes it off, it pushes it off. Now, here's something that I know about the market when this candle right here is formed. This candle right here is institutional trading. Why do I say institutional trading? Because retail traders cannot make this type of move in the market. This is a huge engulfing candle. And retail traders cannot, we don't have enough money to push this market up like this. This is all institutions. This is central banks, major institutions, hedge funds, different things like that that actually have enough money to push this market up. So once I see this right here, then I see my RSI stochastic RSI oscillator right here. Once I see this goes to a oversold situation and it crosses back over this 20% level on this candle right here, it closes above. After this candle closed, it crossed back over that 20% level. So when this candle closes, and another thing I want to interject, guys, we're only trading off closed candles. I do nothing with this candle while this candle is moving. So I won't even take a look at this candle to after 5 p.m. Eastern Standard Time, because I'm in Georgia. So after 5 p.m. Eastern Standard Time is when I'm going to actually take a look at this candle. I'm going to go through all of my pairs to see what potential trade opportunities I may have, right? And I'm not cherry picking this trade here, because you see this happened a lot. Look, happened there, and I'm already looking for a buy position because I know the market is going up. So I'm only looking for buys. So this is not a situation where I'm cherry picking these trades. Before I started filming this video, I never predetermined that I was going to be on the British Pound JPY pair. But as you can see, market is just going up. So my mind is made up that I want to take buy trades off level of support and resistance, levels of support, right? So that's already part of my trading plan. That's my trading plan. I trade in the overall direction of the trend off levels of support and resistance when the price bounces off that level and gives me a reason to go into the trade. So that's part of my trading plan. So this is not an instance where I'm cherry picking trades, okay? All right. Now here, this is when I would get interested in this pair after this candle right here closes. So I'm going to take this trade, right? I'm going to take this trade. Now keep in mind, I'm a technical trader. I don't really pay attention to news unless there's news that's going to be affecting the market, like the CPI or interest rates, things like that. I will take a look at it, but for the most part, I'm trading on such a large time frame, I don't really pay attention to news or anything like that. So after this candle here closes, I am interested in taking this trade, right? After it breaks this level. So this is no good. This is a closed candle. This is my trading day right here. This is the candle that I'll be trading off. This candle right here. Now, how do I trade? So the candle closed here. This is the close of that candle. This is where this candle is going to open. But this trade has to prove that I'm right. It has to bring me into the trade. So I will only take this trade if this trade breaks this level right here and continues to go up, right? Okay. So after this trade broke this level and my stop is here, now I'm not going to go over stop loss placement in this video, but let's just say my stop goes under here. But I got a couple of stops stop losses that I use. It depends on the volatility of the pair. I would definitely use it on the, I definitely wouldn't place my stop here with this pair, GBP JPY. This pair is nicknamed the Beast because this pair has big swings in it. See these wicks right here? This pair can take you out because once that spread opens up, I use a US broker. So, you know, they kill us with the spread. So once that spread opens up, that spread will open up and it'll hit your stop loss, right? It won't even be at your stop loss because the spread opens up, it hits your stop loss. So when it comes to this pair, British Pound JPY, my stop would not go here. I'm going to go over stop loss placement in another video, but for the sake of this video, we're just going to put the stop loss here. We're going to put the stop loss here at the low of this swing, the low of this swing right here. So if I was looking for a 1-to-1 on this, you can see I made that 1-to-1 in a few days. So let's just say 364 pips. It's going to be 2%. It's going to be 2% of my account. I don't really care how many pips this is. This doesn't matter to me because from being from trading for a very long time, being a seasoned trader, I understand. You look at your trading account, you look at your growth of your account in percentages, not in real dollars. Because I may make $1,000 on a trade, right? But I'm only risking 2% of my account. So if I'm making $1,000 on a trade, risking 2%, then my account size is $50,000. My account size is $50,000. But you may not have an account size that big. Or I surely didn't start with an account that big. I started trading with $100. $100. And then in about 8 to 9 months, by me adding to my trading account and me winning some trades, I got my account up to like $10,000, right? But I was adding a lot of money to my trading account. But the point I'm trying to make is 2% for me could be different for you. So always look at your account in percentages if you want to be in this game for a very long time. Never look at it in real dollars, right? You have some people that may have a $1,000 account and they want to make, I don't know, $300 a day. You're going to end up blowing your account. You're going to end up blowing your account because you can't beat these markets. You have to respect these markets and you have to trade the right way. I don't care what anyone says. All right, let me get off my soapbox. Let me stop preaching to you. But okay, so as you can see with this 385 pip stop, I was able to get that in. We hit that target in roughly. Let's just call it. So this is the first day of trading. 1, 2, 3, 4, 5, 6. So we were able to get that in 6 days. In 6 days, we were able to hit that target, 385 pips. Now, I'm not going to say we made 385 pips. I'm going to look at it as saying I made 2%, right? That's if I go for 1-to-1. But if I want to hold this trade to, you know, all the way up until the next level of resistance, then we may, you know, you can possibly get about 4% from this trade. But me, I'm a 1-to-1 quick hitter. I like to go in the market, get my 1-to-1 and get out and wait for the next opportunity. And let me show you guys how many pairs that I trade. Bam. I trade all of these currency pairs. So there's always an opportunity for me in the market. And that's how you justify trading the larger time frame. You just have to trade a lot of pairs. Trade a lot of pairs and you can get you know, 2 to 3 trades per week. Okay? Excellent. All right. So keep in mind. So now let me show you guys how you consistently take trades, but on the smaller time frames, but still using this daily time frame as a guide. Okay. All right. So now let's look at another example. And this, I hope this doesn't go over anyone's head. I hope this is not too advanced for those watching this video, but I'm just going to show you guys something. All right. So you're looking right here, price came up, we won this trade, we're going. Here we're at a level of resistance. You don't want to take this trade because this goes against our trend. We are trending up. We're trending up, right? So we want to look for another opportunity. Want to look for another opportunity in the market. Now, you come across this level here. But if you look right here, is this a level? We don't know. We do not know. It looks like a level. Price froze back here. Price froze back here. So how can we determine if this is a level and get into this action right here? Well, let's go back to what we know. We know price is going up. We know price pulled back here. We know price may continue to go up, but we're coming up on this level of resistance right here. So what can we do? Yeah, we can wait till price breaks through, come back and retest, but that's going to take forever. Can we get into something like this? And how do we confirm that we want to go long? Well, that's what I would do if I wanted to take this trade. I would just go down to a smaller time frame, like 4 hour. Only intraday time frame other than the daily that I would commit to taking a trade on sometime is the 4 hour. I would put a level here because I'm interested because of this level of support back here. You got some resistance here, got a little resistance there. Okay, maybe sort of kind of. Let's see what it says on the 4 hour. So let me mark it. Okay, yeah, it's marked on the daily. Let's look at it on the 4 hour. This is why this support and resistance indicator is so great for me. That's why I love it so much. I can't see myself trading without it. This is what you would see on the 4 hour. You would see this right here. You would see levels that is bouncing off levels of support. It's bouncing off levels of support on the 4 hour. So you do have a level of support right here on the 4 hour. You just don't see it on the daily because the daily time frame doesn't recognize this small little level here. But it's still a valid level. It doesn't recognize this level. Price came down, came up, and it's hovering right here, right? Then we would go through our same routine again. We would wait till this price crosses over the 80. And why would we take this trade? Why would we be so comfortable taking this trade? Because like I said in the beginning, if you're trading in the overall direction of the big trend, even if you take bad entries, as long as you're not over leveraging your account, you can definitely withstand the pull, the drawdown. Because no matter if it pulls down to here, pulls down to here, wherever your stop is, if you lose the trade, it's only 2%. Only 2%. That's why it's so important that you manage risk before you consider thinking that you're going to make money. Because if you don't manage risk, you're going to lose. So what would we do? What would we do in this situation? We would wait for this oscillator to turn, or we would have to watch this now because this is the 4 hour time frame. There's going to be 6 of these candles in one day. 6 of these candles. So we may have to look at our charts a few more times during the day, right? But once we get that signal to go long, when that crosses back over, right, we will take a enter at the break of that level, at the break of this candle, right? Does a stop go here? My stop wouldn't go there. I need a little play. So my stop would go here because this guy started this move. I'm going to explain what I mean by this guy started this move on a later video. It's a very interesting concept. But my stop would be 171 pips. Bam. Straight to the money. 171 pips all day long. Why is this the case? Why is this the case? Simply because we're trading in the right direction. We're trading in the right direction. That's bottom line. We're trading in the right direction. So even if this would have been a bad entry, price played all down here, went back and retest this, as long as it didn't break this level right here, we're good. Price doesn't always go exactly when we want. That's why our stop loss placement is so important. Again, we're going to go through another video with that. And as long as we're trading in the right direction of the market, we're going to be okay. And that's the video for today, guys. I hope you guys enjoyed this video. I think it was a pretty good video. Please remember to like, subscribe, and share this video. This is Learn and Trade Forex. I thank you guys for watching. More videos to come. I enjoy teaching this stuff.
I'm so blessed to discover trading, and I just enjoy teaching and showing people how to do it. It's a great way. I have a book out, Trade Your Personality. You can pick that up on Amazon. I'll link that down in the description. But if you guys like, commentary like this about trading, and these principles work for any asset, you can subscribe to my channel. I don't do a lot of videos anymore, but when I do videos, I try to give a lot of quality. I try to give a lot of substance. I try to give a lot of benefit to the videos that I do make, hoping to help you guys with trading. Also, you can visit my website at www.learnandtradeforex.com. Just like that, learnandtradeforex.com. Because I believe you need to learn before you earn. All right, guys. Thank you for watching.